Good morning, everyone. Welcome to the On Time, On Target Morning Brief. We are finally back home from vacation after being on the road for 11 days for volleyball and a little time away. So finally home, have the red face from some of the leftover sun from Florida. But finally back home, have full display, so you're going to see what you're used to as far as some of the information I present on a daily basis. Got a great show for you today. We're going to talk about Cathie Wood, who again is the Chief Investment Officer of ARK Investments. She started these funds several years ago. Name hasn't necessarily been on the leading edge of like CNBC until lately. I mean, last year her funds all outperformed. They tend to have ARK and then another one like the ARKK, ARKW. We'll take a look at those a little bit later. I do have some of those. The way they got on my radar scope is some clients basically brought those funds in. So when somebody signs on, we bring over their portfolio as is, right? And I say, don't outthink it, don't sell it. Let me see what you got. And I saw these ARK funds, and as I was doing my due diligence on the new investments, I was like, holy crap, look at the returns on these things. They are super aggressive, super weighted towards technology, even more so than I am, and they've been crushing it. So I of course like that because I'm looking in there for new ideas, but I'm also looking at, okay, well, I try to find funds that if they can do the same thing that I'm doing manually, I'll just go with the funds, like you've seen this year with some of the thematic funds I've used. ROBT, which is an AI type fund. I have a next generation fund that's focused on 5G, which is much better than going in and picking the individual stocks. Sometimes you want best of breed, which is kind of what brought us to the dance, right? We've been using that for years, but also there's times when you just say, okay, I don't know who best of breed is. The marijuana space is the best example. I don't know who best of breed is, so I just buy the MJ, right? Well, by looking through Cathie Wood's funds, since she's been outperforming, she also has gotten a lot of face time on CNBC, and she also publishes her stock picks and updates, and she's very active, if you will, where a lot of hedge fund managers, where mutual fund managers, in her case, really sit back and don't say much of anything, right? It's more of a cone of silence. So by her putting it out there, she's getting a lot of visibility. And the reason I wanted to feature her this morning on the show is she put this weekend, get ready for it, a $3,000 price target on my fave, that's sarcasm, Tesla, right? So Tesla, $3,000. So we're going to take a look at the chart. I will give you my 2 cents, which again, if you've bet on Cathie Wood, you've made a lot of money in Tesla. If you've listened to me, you've missed out on a lot of money in Tesla because I've been wrong, but we will talk about her number out there. And if, hey, if you believe her, then, buy Tesla hand over fist here at $700. Because it's going to quadruple by 2025, which is when she says is going to hit. We'll talk about why she's saying that, and if what she says is true, the stock probably could hit that, but I just don't think it's going to happen. So we'll peel that back. Also, before we open here, I have one of the squatter members like in the room with us, like physically in the room with me. So it's a privilege to have Predator here. Again, we've been talking stocks a little bit this morning. We're going to talk more today once we're off the air. So good stuff. So I want to just welcome him personally. With that, let's go ahead. And if you're catching us on replay, make sure you hit the subscribe and notifications bell if you want to join us in the room. Not in my physical room. Only a few people get to do that. But if you want to join us in the room, there's a Q&A and a chat window where we communicate with each other and I can answer your questions. And with that, let's go ahead and get started. welcome back, everyone. Here's our lineup card for the day. Make sure you have your chat window and your call sign window or your Q&A window set up appropriately. And standard disclaimer applies. This is a financial education presentation. You have to do your own due diligence for acting upon anything you hear this morning, especially going out and buying Tesla hand over fist at $700 a share. But full disclaimer information is available on our website, ototnow.com. All right, with that, welcome to March 22nd. We're officially in spring now. It's Texas, so when it's not snowmageddon, it's kind of always spring here. So it should be high 70 degrees. We're going to get out and do some outdoorsy stuff today. So pretty fired up about that later on this afternoon. Our mission objectives: grow our money, protect our money, and live off our money. Today, we are in the mode of we're talking about like how to grow your money as fast as possible. You know that historically, when you talk like 100 years, stock market's about that 10 to 12% type return. That's if you kind of buy the whole market and you hold through all the downturns and you make no effort to outperform. And that's fine. If that's your thing, then do it, but stick with your plan. Because you're looking at making 10 to 12%. Where when I view things, especially for my total return clients, or even if you're in retirement and you're living off income, we still keep that little total return piece usually, where you're going to have your perennial outperformers. Things like, I don't know, have you heard of Apple? How could you not have Apple in your portfolio for the past decade or two? But even going forward, that's another. Google's a name you probably just need to throw some in your portfolio, right? Amazon, heard of them, right? So there's certain things where you want to have in there for that long-term outperformance. You not necessarily, anything that's not best of breed, right? We're talking only the best of the best, and you get off into, you don't want to get too far, crazy with penny stocks or anything, but you do want that total return piece. So whether that's your whole portfolio or you're just talking about a small portion of the portfolio, when you go for outperformance, you have to find names that are very, best of breed with a moat, highly addictive product, if you will, cult following. It's kind of nice. Starbucks, cult following. Tesla, I would say, pretty much cult following. There's Bitcoin, the poster child for cult following right now. And these things go in and out of favor, but certainly you're looking for that outperformance of what's hot right now. So, and that doesn't mean like today, as far as short-term investing, we're talking about next 2 years to 2 to 5 years. So that's why, Cathie Wood is saying Tesla's going to 3,000 by 2025. And we'll talk specifically about why she thinks that. Okay, so she is our long-term topic of the day. Again, she's in the news a lot, so a simple Google search can get you kind of what she's buying on a daily basis. But we're going to talk about the bigger names and whether I own them in the book or not. Guess what? Most of them I do. Some I inherited. Some I don't necessarily like right now. Some I'd be looking to get rid of, and I wouldn't be surprised if she dumps two of the names we're going to talk about. You'll see the six are at the bottom: Tesla, CRISPR, Therapeutics, Palantir, Square, Teladoc, and Roku. Those are my two least favorites. I have both. I'm looking to try to talk my folks who have them into selling them, because I view those as those are the lockdown stocks, right? Teladoc and Roku is, hey, the doctor's going to video chat me, and Roku is just another method of streaming, right? I don't know. I have like 5 of the little Rokus running around the house somewhere, probably more. I don't even know. But as far as, the equipment and the streaming service, it's one of the best out there. Those are lockdown type of stocks, in my opinion. So now's the time to probably start lightening up on those. I'm not going to go out and buy airlines or cruise lines yet, but starting to think about some of the shifts there. So I would think that those would be on the way out. The other 4 are pretty well rock solid. Okay, our flow for today. We're going to go long, short, open, short, long as soon as I can zoom out, which it doesn't look like I can. So we're going to go through the market review, headline review. Did have a big weekend. So we'll talk about some of those. Some things more important than a president falling down the steps, even though that seemed to dominate the not falling down the steps, falling on the steps. We'll get into short-term execution. We'll execute the market open. Contingencies and academic resources are standard. All right, let's take a look at the TD Ameritrade ThinkPipes platform, which is showing up on the screen now. And what you see over here is the S&P 500. This is, again, a 9-month chart. And yeah, we've had some volatility here towards the end, but really the uptrend channels there, I don't draw those. Those are AI generated. So again, that's the computer doing the math for us, which is nice, right? And still showing us really in a slight uptrend, right? So we do want to pay attention here. What did we talk about last week for the first time in a while? taxes. What's going to, so where's the drama, right? So mainstream media needs drama, right, to bring the listeners and bring their followers and, get them all spun up. Well, everybody's all spun up about inflation, right? And longs and shorts. Yeah, let me get that in the room there for you. Burner. Boom. Thanks for the pimp there. So there's the long and short names. We'll come back to that. But as far as, what's the drama? It's all been inflation and interest rates, right? Until the chairman of the Federal Reserve says, don't worry about it. It's like, okay, well, we continue to freak out until you have something else to freak out about. Let's freak out about taxes. Everybody's favorite topic to freak out about. So that's what I think what we're going to see. That's going to be a headwind for the overall market. So when you're looking at the long-term chart, it's hard to rage higher in the face of tax hikes, right? But you also have this, I don't know, rip-roaring economy that's about to bust loose, which is what everybody's worried about as far as the, excuse me, the inflation trade. So I don't know what's going to win out. I tend to bet on the economy because that's really kind of what this is about, right? The profitability of companies, big American companies, can they get it done? Yeah, I think so. So I do think we see a move here. I would not expect to be 20% higher right now by the end of the year. Maybe we are, can't say we're not, but I'm not ready to hunker down and go too defensive yet, but I am paying attention to some of the themes out there, certainly rotating out of the stay-at-home stocks. Peloton, I mean, great company, great products, love everything. Don't own one myself, but I do know folks that do. They love them. That's fantastically. Can it justify the share price of the lockdown share price? Probably not. Okay, let's zoom in a little bit. This is the 5-day on the SPY. Again, you have the blue, dark blue are the individual days. So we have sold off here on Thursday. Thursday towards the end of the day started to sell off, and Friday, I can't remember what the exact announcement was on Thursday afternoon. Somebody said something and then market tanks after that. But you do see here Monday morning, this red line you see is the open of trading at 3 o'clock in the, 4 o'clock Eastern, if you will, 3 o'clock here in Texas. And you're seeing a positive momentum going into the open. So that leans me more towards thinking longs and going from there. And tech has recovered. So again, tech's kind of after the big sell-off last week, tech's long anyway. As far as our setup for the longs and shorts, like Berner was asking, Aveo is your number one long. I actually like that. It's got an announcement out there, an early announcement for a kidney cancer drug. So we'll take a look at that. EDSA is the name you probably have not heard of. They have an exclusive licensing agreement. I don't like that as much. And then CP, if you watch CNBC at all, there's a big merger out there. Canadian Pacific's buying Kansas City Southern. Canadian Pacific stock is going down. Canada, CP, I think it's Pacific. Stock's going down. You have KSU, Kansas City Southern, stock is up like 15%. So consider there. All right, we'll get back to that when we get to that portion of the show. All right, let's go back to CNBC. We'll refresh here real quick and take a look at the headline news. You see decent bounce in tech. So again, for those of you that have the screener set up in the morning like I do, I check that from bed, because that's what I do. I'm a nerd. And of course, that kind of tells me what the big themes of the day are going to be. But when you have long-term themes, pulling up the watch list right now, pre-market, when you have Tesla, Asana, QClean, Blink, Velodyne LiDAR, Neo, DraftKings, it's a tech day, right? So tech's kind of carrying the theme. Those names are up nicely out there. Okay, let's take a look around the world. Europe pretty much mixed, not much going on. Pretty big moves here. Japan down 2%, but China up 1%. Mixed day. Don't really see the reason for that there. Nothing to freak out about, just something to watch. Doesn't have the numbers in Friday, but remember the Dow and the S&P were down slightly, and the NASDAQ was in the green. As far as bonds, the 10-year, rescinding back from, I think I saw 1.76 might have been the highest. It's down to 1.69. It's trending down, so that should squelch the inflation fears out there. Oil, 61. That's about right. A little high. Gold, I had an interesting conversation about gold. Gold starting to look attractive here. Yep, longs and shorts again. Here we go. There you go. Bam. You're in. All right. Gold's starting to look a little bit attractive here. Not silver, really. I generally like silver more than gold. Silver's run up. Gold, yeah, 1,700. I don't know. If you think the world's going to fall apart, get some gold. All right, Bitcoin at 57,000, pretty much unchanged. All right, let's go through the headlines real quick, then we'll talk some Cathie Wood specifics. AstraZeneca, you can follow that. It was bad news last week, I guess, and then good news this week. So again, I'm not trading that stock, but it's going to have a ton of volume if you want to get in on some AZN. There's your Cathie Wood. Okay, first one we'll talk about is Tesla, 3,000 per share by 2025. This is entirely based on, and she puts this in words better than I do. So listen to her if you want the full explanation. Or just Google Cathie Wood Tesla 3000. You can see probably a YouTube replay of it. But basically, if you think this is how the world is going, if you think in 3 to 4 or 5 years from now, individual car ownership is going to kind of be on the way out, and you think there's a public or private fleet of cars, so instead of Uber where you're getting individual drivers right from your phone, now you're logging into a fleet. If whether, like I said, maybe it's a like a subway system where it's actually owned by the city or the state, but doesn't matter. There's going to be a crap ton of Teslas running around. Instead of having your own car, you simply I want to go to Walmart, bing, bing, bing. Tesla shows up, takes you to Walmart, and same sort of thing on the way back, right? So if you think there's this autonomous taxi fleet of self-driving cars out there, if that's your future, Tesla's a pretty good way to play that. I would also say a better way. I'm biased, I know, so don't take that for what it's worth. The iCar's coming out in 2024. That is 100% going to think about this exact, they have marketed to the masses, I don't know, for a couple decades, so they're pretty good at it. If I take my phone and go put it, into this iCar, whether I own it or whether I'm leasing it for, to take me on a quick trip, those are the things that, if that's going to happen, I think Apple stands a better way of capitalizing on it. All right, I'm going to take you over to Schwab real quick to show you the names. Tesla's here in the upper left. Obviously, she's very hot on Tesla. It's gapping up today at around 670. CRISPR Therapeutics, I have been open that I don't know enough to really talk intelligently about this yet, and I need to, but genomics, I don't know how to say the darn word. I think it's genomics, but the gene manipulation, all that stuff is really the wave of the future, one of the waves of the future. So we need to take a hard look at that. CRISPR's probably your best way to play it. Palantir, my take on Palantir, data's the new oil. She loves that stock. I love that stock. Couldn't agree more. I have not seen her throw out a price target, but it wouldn't surprise me if it has 3 digits by the time she does. Square is kind of a veiled way to invest in Bitcoin. They'll let you transact in Bitcoin now. So one of the first ones to do so. They've been very progressive. Payment processing and electronic ledgers and stuff are here to stay. So I'm not a huge fan of that space, but if you're going to get in that space, Square's the way to do it. And then Teladoc and Roku are also the names that I think are just probably on the way out. I just don't think she's let go of them yet. All right, we got 30 seconds to the open. I've got switched over here to the TD Ameritrade screen, so give me a second to get all set up. All right, welcome everyone to the On Time On Target play of the day. 15 seconds to the market open. We have the S&P and the futures kind of trending up and the tech space trending up. We've got 2 longs and a short on those 3 screens for you. 5 seconds to the open. We have Aveo is my favorite long, sitting around $11. So there's your opening bell. So think about a 10-cent stop or so. I'd like to see that come down a little bit and then continue back higher. We have EDSA in the next screen. It's already up 11%. So again, that's a little high out of our range. These are both long, so that's what we're looking for. Again, Aveo is this announcement of a kidney cancer drug. So I think that could get a lot of momentum. It's already up 80% year to date, but it's also sold off hard recently. The short we have, and yeah, look at this. Can't take it short now. It was gapping down 3 to 4% on this railroad merger news. It's already back to basically even, so we can't touch CP, so we'll get rid of that. I put a low vol name in there, BPTS. I don't know who they are, and Biofitus. Okay. Why did I type that wrong? BPTS. This name came up correctly. I don't know. No, it's not gonna let me short it if it doesn't pull up the name correctly. So can't get it here. GME is again, I'm not going to touch GameStop. Actually, it was AMC, I think, was the one that was gapping down. Yeah, AMC, there's your short if you want it. Otherwise, I'm really looking at this Aveo long. And if we don't like it, hey, no trade today. it was very hard going through the screeners to find stuff that qualifies. So a little bit of a reach on some of these. EDS is just kind of sitting there. I would not really take a hard look at that. So Aveo, really, it is not much volume going on in Aveo because it's not jumping around here. We will zoom in, see if we can see what's going on. 30,000 volume in the first minute, so 8,000, don't really care for that either. All right, for the opening, looks like NASDAQ's continuing higher, well, 0.6 or so not too bad. All right, not moving in Aveo. See what other long I had out there. SLGG, I'm going to put that, this is a long, put that in the middle screen. It is a gaming, I forget the Super League, something, Sports League gaming. It has been on fire. It was gapping up 9%. It's now in the red, so that's off the list. We'll take a look at this Kansas City Southern. I wouldn't touch a railroad for anything long term, because I mean it's dead, right? I mean it's just a dead business, dead industry. So I wouldn't touch it long term, but you can see that it was gapping up 15% and then selling off. It would violate our particular trading plan, but if you're going to trade KSU, I would trade it short. Right, up 15% on this news in a left for dead industry, and got nothing exciting about that. All right, if you have to trade today, it's going to be Aveo. Gosh, it's just ticked down again. I was looking for an entry down here around 1085 or so. It just hit 1066. Doesn't really have enough volume. I mean, 60,000 shares in 3 minutes. So, all right, I think I'm going to bail on the trading idea. Look at AMC dropping like a rock, though. I wouldn't bet on movie theaters either, even in the opening trade. That's kind of on you. I think there's a little too much manipulation there, but man, look at that drop from 13.5 down to 12.80. That's a full 3-hour trade there with a 10-cent stop, but I wouldn't touch it here. So, all right, that's where we are. No trades today. Let's take a look at Tesla and some other names. So Tesla long popping up. I guess you could have traded off of Cathie Wood's news. I can't do it. I'm like 0 for life on trading Tesla, so why break that streak today? But it is going higher. Let's see the other names I like to look at. Luckin was kind of dead this morning, but had a big week last week. Any takers? How much? I'd say it's at 1020. It's up 4%. Not bad. 1040 up 4%. So my math was a little bit off, but not bad. Open down here at 995, getting some love behind it. I like it as a long-term name. All right, and then let's just Palantir, man. Palantir has been problematic and been kind of out of the news. So it's like now that you have Roblox out there, it's like Palantir is like not newsworthy anymore. So it's really hanging out here in that $25 range. I'm not worried at all long term. You can buy in here if you want. I don't mind that at all. I mentioned Roblox. Let's take a look at that. It did revisit 70. Guess I need to learn my tickers. Not put the wrong one in there. There you go. It revisited below 70 last week. So, I'm not ready to back up the truck unless we get into like the 50s. But, if you have it, you're happy now. It bounced pretty hard off of 70. So that's what you're looking for, right? You're looking for strength in the name as more people figure out exactly what do they want to hold this or not. So anyhow, strength in the name, bouncing up. 2.5% today. I like that. Let's take a look at Bitcoin real quick. Again, we own the GBTC Trust, basically gapping down 3%. Luckin hitting 1070. Might have to stare at that chart for a little while today. That's kind of fun when it's in the green. It's not fun when it's in the red. I get that. But Bitcoin, we're going to talk about here in a second, basically off 3%. But again, the staying power of Bitcoin, I believe in it. That's my take. Okay, let's go over to the question of the day. Get things, actually, before we do that, let's go over and take a look at what's moving in the big book. So Clickstream up 41%, have not seen a headline justify that. There's our Luckin up 7%, Tesla up 5%. Some more psychedelic names in here. There's your Roblox, DraftKings, goodness. How to Print Money by DraftKings, back when it was $15 or 11 or whatever. I think my entry point's at 11 or something. It's crazy. I have sold some along the way, so I haven't been greedy. but gosh, every time I sell some, it adds on $10 a share. So it's like, stop selling, please. But it's up around here at 75. That's got to be near the all-time high. I don't think it's touched 80, but I do have, I do have a ton of it still. I have a ton of Luckin still. CLIS, I see the question in the chat there. Supposedly it's first of all, it's a penny stock, so don't touch it unless you really view it as a gamble. I was in it. I'm already back out of it completely. I'm flat on Clickstream, and I'm not going back in unless it gets below 10 cents again. I don't know what to tell you. I don't. It's supposed to expand internationally. I don't know. It's got an ex-NFL name behind it that is here in Austin that I've talked to. He's a hype machine. It's tough. That's a tough one. I don't know. I'd probably take the gain is what I would do if I was holding. Well, I already took the gain, so I certainly would take the gain if you tack on 40%. All right, let's look at what's in the red today. Always losers out there. Bitcoin leading loser. Not sweating that. Prudential, Delta Airlines, JP Morgan. If you believe in the interest rates increasing, inflation trade, hop into the banks. If you're going to the banks, just buy JP Morgan. That's the only bank you really ever need. Unless, of course, shout out to Lebanon Citizens, right? It's been an outperformer. Just insane. Can't explain it, what they're doing there in Lebanon, but it must be right. Okay, Alibaba selling off. People are asking me, hey, what are the screaming buys right now? And they almost start laughing when I say, well, Alibaba and KWeb, which is Chinese technology. And they're like, well, isn't that fully really risky? And I'm like, yeah, that's how you get paid, kids, is you take the risk when nobody else is willing to, right? So where Cathie Woods is getting laughed at for calling Tesla a $3,000 stock. I'm sure there's some snickering when a much little league player like myself starts talking about Alibaba. But I will tell you this: I have 100% conviction that the Chinese government will not be cracking down forever on the tech firms. That will be a phase, because governments work in phases until some other drama queen attracts their attention, right? So when the Chinese government stops cracking down, you are going to see the Chinese tech names scream higher. That's my opinion. Don't put your whole house on that. See the disclaimer. But I'm very excited about buying more Alibaba and KWeb here. There's a whole slew of names. Break open KWeb, look at the top 10, and you can see all kinds of names that I think all of them are undervalued for what their long-term potential is. We shall see. Now, you may have to wait a while. Just because you buy it on March 22nd, it may be October before we see this thing pop. Hopefully October 21, not October 23. But they're going higher here eventually. Okay. All right, let's go back to close out on our question of the day, which I talked about earlier, which is exposure to what are funds that invest in Bitcoin. Well, the fund that I like is the GBTC. I'm taking a phone call later today. Greystone has branched out into other areas, and I'm not as smart as I need to be on this stuff. So I have a phone call at 3 o'clock my time today with what I would consider an expert, who's a client that is all over this stuff. So I'm going to learn more for hopefully about an hour today. And I'll report back if I like what I hear. I tend to be a bit skeptical. I was skeptical on Bitcoin for a long time. That left a lot of money on the table. I'm not now. So maybe I'm old. Maybe my brain is slow compared to the younger folks out there. But cautious and prudent, I would say, are the leading adjectives I would use to describe the situation. But I am open-minded, and there are some things that are going to change the world. So I'm listening. So that'll be today. If I like what I hear, I'll report it tomorrow. But here's where we're looking at for the Grayscale Bitcoin Trust. They basically own it, so you don't have to. Your 132 character password, you don't have to remember. The password that I think can't be reset. And if you lose it, it's gone forever. The nightmare of Bitcoin, if you will, laptops with millions of Bitcoin sitting on them in a dumpster, in a landfill somewhere, that sort of thing. But you do have to, to buy into this. You can do it to open market. Who else has it? Well, the ARK funds have it. So just realize the reason I bring this up isn't because I want you to get your Bitcoin exposure through the ARK funds. That's not. So don't miss it. So here's my exact point, and I will give you an example, is when you start getting into lots of funds, which is why I got out of funds and I went individual stocks almost entirely. But now that I'm putting you into stuff like QClean, NextGen, Robot, cybersecurity, Sky, there's a lot of funds out there that I'm using for themes. The downside of that is you don't often have a clear idea of how exposed you are to something, right? And the example I will say from 2012, I'm sitting over in the Middle East. I'm working 12 hours a day, which means I have all kinds of time on my hands. You're like, well, really? If I work 12 hours, I would have no time on my hands. Well, when you live in the middle of a desert with nothing to do and you can only work 12 hours, well, you have literally at least 4 hours of doing what? Going to the chow hall? No, you're reading, you're studying, you got the internet to entertain you. I suppose you could just sit and, watch shows or whatever. But I started really getting into what, that's when I found ETF.com and some of the portfolio visualizer tools that are out there that are cool. And I found out, I had a ton of Apple stock already. And it was my number one holding. It has been, obviously, I've told you that for years. Paid for all this is kind of what I like to say to folks when they visit my house and see the fleet of vehicles and things. It's largely that's Apple. But I'm like, I have all this individual Apple, and I start looking at all my mutual funds, and it literally was a WTF moment, because I have like my, like an international fund is. Okay, like I buy an international fund. I was probably USA, or they don't do investing anymore, so danger. But I look at my international fund and I see, well, the number 4 holding is Apple, and I'm like, what? And they're like, yeah, they have their prospectus and they have to be like 70% international and 30% whatever they want. But anyhow, Apple was so hot. What I found is it really didn't matter what my funds were. One of the top 10 holdings was Apple. So I was already, so the wow moment, which is why I bring this up, is I was already overexposed to Apple intentionally through the individual stock. It's like I chose to do that. But then what I didn't know until I actually looked is now I'm way overexposed to Apple. Well, I'm not going to sell my Apple individual shares, so I just bailed on these funds and started picking best of breed out of that. Thank the Lord I did, because that's made me a lot of money doing that. And that's what I do for clients. But so Bitcoin, let's tie this back. So the pure play is the Grayscale Bitcoin, I keep saying Grayscale Bitcoin Trust, the GBTC. But realize if you own Square or Tesla or PayPal or other companies that are out there buying MSTR, MicroStrategy, if there's companies out there loading up on Bitcoin on their balance sheets, people are investing in them as a derivative of Bitcoin. Well, you could end up being hugely overexposed to Bitcoin if you didn't know that. So that's one of the things to take into consideration is, how much exposure do you have for Bitcoin? I think it's going to 100,000, but I'm not ready to take a huge bet on it. I have a portion of my portfolio. I'm happy with that. If that doubles, triples, yay. If it doesn't, okay, I can survive a let's go to zero move. But anyhow, trying to figure out the exposure you have to something is not that easy sometimes. So just something to consider, thought piece for the day. All right, that's all I have. Let's take a look back at the market and see what it is doing. That's showing futures. Let me refresh. So Dow down a little bit. To have your NASDAQ basically about sideways from where they opened. So maybe it's a Monday yawn. That happens on Mondays. Friday's usually the exciting day. So market getting warmed up too, or maybe this is everybody else's spring break. Ours was last week. Maybe theirs is this week. So, all right, with that, I will let you guys go and we'll see you back in the morning.